Hey, what's going on, friend? My name is Juan Pablo. I'm a full-time real estate investor and a licensed mortgage broker, and I'm here to share with you some information about the reasons why it's hard for you to get qualified for a mortgage. Well, simply put, what kind of mortgage are you applying for? If you're applying for a personal mortgage, a residential mortgage, an owner-occupied where you'll be living in the unit, guess what? The underwriter is going to be a little bit harder. Why is that? Because 80% of an underwriter's focus for residential properties, especially if you're an owner-occupant, is on you, the borrower. I want to see all your documentation. I want to see your credit and your income. However, when it comes to investment properties, especially commercial, 5 units and up, that's considered commercial properties in the mortgage world, 5 units and up, 80% of the underwriter's focus and emphasis is on the property, whereas 20% is on the borrower. So if you're that person who says, you know what, I want to quit my day job, I want to be financially independent, I highly recommend for you to get into multifamily investing as quickly as possible. It's so much easier to get started in multifamily than residential because they accept creative financing. They allow the seller to do seller financing. It's way better. When dealing with residential mortgages, they have to adhere to the guidelines outlined by Fannie and Freddie, which is the secondary mortgage market. And as a result of them adhering to those guidelines, they are a tad bit more stringent when looking at your credit. So with residential mortgage lenders, they want to see 2 things, as I stated a few moments ago. Your credit as well as your income. And your income must be documented as well as consistent for at least 2 years. So unfortunately, my friend, if you just had a job change, even if you made more money, unfortunately, most mortgage lenders will not provide you with a mortgage. So it'll be hard in that case. Simply put, they want to make sure you're consistently working at the same job. Now, if you switch jobs but same industry, that's permissible. But if it's a different industry, if you want to being a photographer to being a YouTube personality, let's say it just changed, you may have a hard time getting qualified for that mortgage. Now, in regard to credit, most mortgage lenders want to see you with a 620 FICO score or greater when applying for an FHA mortgage. Not bad, not too difficult. But when going into an investment mortgage, you might need a higher FICO score, like a 640 to 680. It just depends on the criteria of the mortgage lender you are applying for. Now, in regard to your income, when applying for a residential mortgage, they want to see the following documents: your tax returns for the past 2 years, bank statements for the past 2 months, pay stubs for the past 2 months, W-2s, 1099s, whatever you have for the past 2 years. And they also want to see letters of explanations. Wait, hold on, what happened to this inquiry you had on July 1st? Hey, well, why'd you make this deposit in your bank account on July 18th? They want a ton of explanations, and you have to provide it. Every I has to be dotted, every T has to be crossed when applying for a residential mortgage, especially if it's an owner-occupant. So it might be hard for you to get qualified for a mortgage if you have a FICO score below 620. But guess what, my friend? It's not the end of the world. I started off, I'm a real estate investor, you haven't noticed. I started off with a bad credit score. I had it below 600s. Too ashamed to say what my score was. However, I made sure I did something about it. I didn't just sweep it under the rug. I actually fixed my credit. So if you're interested in fixing your own credit, have us do it. We'll be able to assist you with that. Have a professional and expert in that matter do it on your behalf while you focus on getting your first property closed. Just check the link below to learn more. Now, let's say you do have the good credit, but you don't have the documented income. I have a ton of real estate friends who are called wholesalers. These are people who are able to get a property under contract and assign their contract for a fee, a wholesale fee, an assignment fee, so they make money off that transaction. Their credit doesn't come into question. However, being that they wholesale, several of them do not have documented income. They're self-employed. And you might be in the same situation where you're making money, you have good credit, but your income is not documented. And if you're in that situation, it'll be very hard for you to get qualified for a mortgage. The conventional mortgage, a standard mortgage in which they are backed by Fannie and Freddie, but there are options. You can apply for a low doc mortgage. What's a low doc? Low documentation. You can get an investment property. I'm speaking to my investors out there. You can get an investment property 1 to 4 units, as long as you bring some credit to the table as well as down payment money. But low down mortgages are perfect for that individual who does not have documented income whatsoever, doesn't have the tax returns, the pay stubs to prove their income. Yes, you can still get qualified for a mortgage with the low doc mortgage. Just check our links below to learn more about credit repair and low doc. Now, if you're a real estate investor out there, it may be difficult for you to get qualified for a mortgage if you already have current properties under your belt, especially if you're doing residential. The reason being is most mortgage companies, when doing a residential mortgage, want reserve requirements per property. It's a pain in the butt. So imagine you have 6 single-family homes and your operating cost per property is $2,000. So they want to make sure you have $12,000 in the bank per property, independent of the money that you have to fund your purchase, the property you're about to buy. So it could be difficult for some. Who wants to have all these reserve requirements? That's why I highly recommend to always go into multifamily. It's the fastest way to financial freedom. So it may be hard for you to buy an investment property for the reserve requirements, but there's always a solution to every problem, correct? There's a way to work around that. The low down mortgage again. With low down mortgages, you don't need to have full documentation or reserve requirements for each existing property that you own in your portfolio. Now, I talked about commercial a lot, so you may be saying, hey, I want to get into commercial right now. Well, hold on. Sometimes commercial mortgage lenders are less stringent in regards to you bringing the credit as well as the income to the table, because 80% of their focus is on the property and the income it produces, 20% is on you, the borrower. But that small 20% of their focus, which is on you, the borrower, could have an impact, especially if you don't have the experience. So most commercial mortgage lenders, prior to providing you with a commercial mortgage, they want to make sure you have about 3 deals under your belt. So at the time of this video, I say 3 deals, but it can change. It just depends on your market. When you're watching this video, it could be 6 months from now, a year from now. It could be different for which mortgage lender you're working with. One can be one that's backed by Fannie and Freddie. One can be a portfolio lender, a mortgage lender that lends out their own portfolio, like a small community bank. They all have different criteria. That's the point I'm trying to make. However, typically speaking, they want to have about 3 deals under your belt. So start off with single family, but if you want to jumpstart your way and work around that and say, hey, I want to go straight into multifamily, Juan Pablo, then partner with someone who has the experience. That's the beauty of partnerships. You partner where you're weak at and where they're strong at. And that's what I do all the time when investing in real estate. Many people reach out to me and say, hey, Juan Pablo, I want to jumpstart my real estate investing career. I have the capital, I have the credit, I have the documented income, I just lack the experience. Would you be willing to partner with me on a deal? I say, yeah, but I have to bring the deal to the table. When I invest in Pittsburgh, Pennsylvania, simply because it has the high cap rates, simply because it's a blue collar area, simply because I like to wash, rinse, and repeat. I like to be the expert in the market, master it to the point you know it like the back of your hand. So if you're interested, just reach out to us, book a call. So if you're still curious as to whether, hey, can I get qualified for a mortgage? I need some help, I need some consultation. Do you guys provide it? Yes, we provide mortgages for low doc, hard money for fix and rent or fix and flip, and we also provide business funding. So we provide a ton of financial services to enable you to be able to get your deals closed. At 100% Finance, we help you find the money as well as find a deal. But if you're interested in learning more, like always, just check the link below to learn more. As always, guys, this is to your success. Continue to earn passively, live passionately. Peace.